Good morning, everyone. It's Jared here from the Alpha Capital Group. I'm just doing a quick run through following the week of volatility and price action, which has just ensued. So I suppose the big driver this week across the board, and has been for the last week or so, has been less data driven and has been more fundamental driven in terms of the news associated to Russia's invasion into Ukraine. So we've seen heavy sell-offs in the indices, as we've alluded to over the last couple of videos over the last 2 weeks or so. And we see that really kind of forefront again this week, where the price action in the indices continued to move lower. When we look at some of the price points, gold has had a very, very turbulent couple of days. It rallied 50, 60, $70 over kind of $170, $180 since the beginning of the month, but has pared back some of those gains yesterday, as was a little bit of a relief rally in the indices of what's been the invasion occurring. So I suppose the markets are exceptionally volatile at the minute, but in both directions. We've seen 1,000-point swings nearly on a daily basis. For example, the Nasdaq Tuesday into Wednesday sold off 1,000 points, and yesterday, Wednesday into Thursday evening, rallied 1,000 points. So you can see how the volatility, it's not just in one direction, it is nuclear, it is in both directions. And we can see that across the board. I suppose at the minute, with the war narrative, we're very much seeing the indices being the weaker play. We're very much seeing the dollar pick up some steam yesterday. Gold has been exceptionally strong, as I said there, for the last 2 weeks or so. And also the oil prices associated with the commodities market has also seen massive strength over the last few weeks, where the WTI and Brent yesterday both surpassed $100 a barrel, both briefly. Now, both have since come back somewhat, but the price action in the near time, particularly for the oil markets, is still very much tilted to the upside. So it's important to at least have an acknowledgement of that. Now, when we look, I suppose, just to bring in some of the charts, some of the price action, again, this is what we mean by the volatility. Massive sell-off really from even last week, indirectly last week. We've seen kind of 3,500 point sell-off initially into this 3,200 level that I kind of quoted on the Dow Jones. We saw a little bit of a spike yesterday, but the price action is coming off again this morning, particularly from about 6, 7 o'clock this morning. In the futures markets, the price action is running lower again on Dow Jones. Now, I suppose into the weekend, what's the best play at the weekend? Well, I would normally say in circumstances like this, where you see gold getting hit yesterday for a $70 move, probably the best position for the weekend is being flat. I know potentially if you've got a particular bias of long or short, and you're maybe looking at running that position, with the volatility that we're seeing, if you run a position and it goes against you, your stop loss with the slippage will not be triggered straight away. It'll be triggered on the next available quoted price. And if that is $40 or $50, or perhaps 300 or 400 points in an index, higher or lower, then your losses won't be at 1% or 1.5% or whatever your risk management is. It could be at 5, 6, 7, 8%. So it's important to be cognitive of that in these markets, it's important to know when to trade, but equally it's important to know when not to trade as well. Because when you're carrying positions over a weekend with the volatility, there's massive risks associated with that. And it informs, in a lot of ways, it nearly comes like flipping a coin and taking a gamble. And when we're trading, that's not what we do. That's not the aim of the game. It's not the objective. It's not the goal for a trading plan, more specifically. Now, again, Dow Jones, as I said, there came back into this 33,000, 33,200 level. It has created another lower high, and on the higher timeframes is trying to move itself lower. Now, in the last hour or so, that downside momentum isn't just as severe as kind of it would illustrate on the 4-hour. So definitely worth keeping an eye on the fundamentals. If we look at the Nasdaq as well, to allude to that, something similar, the Nasdaq has continued to sell off, particularly from these highs. We broke through 14,000 on Tuesday into Wednesday. We retested. We continued selling off all the way back through to kind of 13,000 early yesterday. Now, yesterday did see a massive recovery in the Nasdaq, and we've gone from 13,000 all the way back in just shy of 14,000 initially, and the markets have kind of moved a little bit lower already pre-market this morning. So we have a little bit of an area here, I suppose, around about 13,600. I think if the Nasdaq is breaking through this 13,600 level, I do think there's probably going to be another wave of bearish momentum back into these lows. But with these fundamental narratives, I think the next bearish fundamental narrative that people will be looking out for is to determine if the capital of Ukraine, which is Kiev, if that has been taken over by Russia. Okay, if Russia captures Kiev, then I think that's obviously very, very bearish for the markets, and you'll probably see 2-3% slide in the indices. Okay, at a very minimal amount, you could even see 3, 4, 5% at a worst case scenario. So definitely we're keeping an eye on that over the afternoon into the weekend. Of course, whether you're long or short on any of these different contracts, just please mind your risk management, because that's obviously the most important element here. I know people can get alluded to the fact of the markets being super volatile and they're trying to make 10, 20, 30% gains, but over the long run, those gains aren't sustainable, and it is important to have that risk management factored in. Last but not least, then on the indices, then as we head to the weekend, is the S&P. So the S&Ps, I suppose, had this area here around 450 yesterday. Massive daily move back in. We didn't close above 4,300, which to me smells like there's maybe a little bit more blood in the water, particularly in the higher time frames. And the S&Ps is moving lower as well. So I think if the S&Ps breaks through kind of 42, 20, 42, 10, this area here, I do believe that it's probably going to extend lower. Of course, similar to that on the Nasdaq as well, we're kind of seeing those massive upside moves and the retracements with a little bit of a sell-off today. So if the narrative turns positive and we get something good, which I highly doubt at the moment, but of course we have to be looking at both scenarios, then of course the indices will continue to pull higher. But at the moment, I suppose all eyes really is on our tweet deck for the latest news regarding Russia-Ukraine, in terms of mobilizations, in terms of occupations, in terms of captures. Is there any key cities or key establishments being captured? And I suppose from a military exercise, that's what's important here. If we look at gold very, very quickly, on the daily here, just kind of looking up to the daily very, very quickly, this was a massive move kind of an intraday move yesterday on gold. We rallied right through just shy of 1980. We came into a key level here, which I've kind of noted around 1950, 1960, and the price action tailed off all the way back down here again. Like, this daily wick is absolutely, I've never seen anything really like it, where we can go from 1878 at the bottom to 1975. So you're talking almost $100 daily move, which is just completely incredible for the markets we are in. If we look at the 4-hour, we can see how the price action rejected. We can back down. We did reject, price action held above. Now we're consolidating. So I suppose our eyes now is price action at the moment is trying to grind lower back to this 1900 level. So I'm kind of keeping a very, very close eye into the weekend. Does this 1900 level break? If the 1900 level breaks, you probably could see a little bit more of a move out of gold and maybe into the dollar as a potential safe haven hedge. Okay, so just worth keeping an eye on that in particular, particularly euro dollar. We saw euro dollar yesterday sell off. We saw cable. We saw the US dollar across the board gain significant strength. So it's definitely worth keeping a very, very close eye on that today. Okay, with that, then we also have to look at the volatility. Okay, so the markets overall, for those who are new and don't really understand the fundamentals, the markets overall don't like volatility. They don't like uncertainty, and they don't like risks, like, for example, war. So when we see these risks imposed upon the markets, well, there's only one way the markets are going to go, and that's, for example, the stock markets, that's going to be lower. Okay, so with our expectation, if you're looking at the VIX, the Volatility Index, that's also another good narrative to look at in terms of assessing the plays within the markets. Now, as we know, the Volatility Index, the VIX, has gone from kind of beginning of February, it was quoted around the 20 level. It has continued to obviously push higher. Okay, and if I were to open the VIX chart, just to kind of show people that, we can see it here very, very quickly as well. Okay, I'm just going to actually give a visual representation of the chart. We can see that the VIX has gone from as low as 20 all the way up to 36. So that's showing that the volatility has nearly doubled in what, a 10-day period. So again, stressing how important it is to be conscious of these little clues into the markets of how the markets are currently reacting. Okay, so everyone, we will be back Monday again for another video. Of course, all eyes really is how the Nasdaq and how these other indices perform into the US session today. Fundamentally keeping an eye and keeping updated on the news and events that's obviously currently being delivered, and of course setting ourselves up for what I would expect to be another very, very busy week again next week. Now, Monday is month end, So it's going to be month end for the pension funds in the UK. So again, we're keeping an eye on that for the FTSE play. But of course, more broadly speaking, beyond that, then we'll be looking at the price action into March as well. All right. Everyone have a great weekend, and I will see you all on Monday.